Hello traders and investors, welcome back to your daily market vision wrap up. Today Indian indices showed positive cues start of the day but closed on cautious note while global markets leaned positive. So let's break down the key trends, sectoral performance and what's expected for tomorrow. Indian markets closed on indecisive mode. Nifty closed barely 7 points up at 24,335 levels. Sensex as well gained 70 points in a lackluster session and closed at 80,288 levels. Markets are in fact waiting for fresh triggers on the likelihood of escalations between India and Pakistan conflicts and global cues. Broader markets remained mixed. IT sector gained 1.23%. It outperformed majorly due to weak rupee and US tech strength. Oil and gas jumped 0.47% due to crude price stability. Media dropped 0.79% and metals as well lost 0.95% due to profit booking. Pharma plunged 1% due to US FDA woes and muted earnings. There seems to be a good sector rotation which is evident. Coming to the global markets, all the global markets remained positive. From the US perspective, Dow Jones climbed 1%, S&P gained 0.76% and Nasdaq jumped 0.71% as we speak. On the European markets, DAX closed positively with 0.8% gains. FTSE again gained 0.55% based on the positive momentum. CAC saw down performance and closed negatively at 0.24%. On the Asian front, Nikkei remained positive and closed 0.38%. Hang Seng on the other hand also was positive but mildly closed at 0.16% gains. Shanghai overall remained flat due to China's stimulus which is in focus. There is global optimism that is supporting the sentiment, but India's underperformance hints at local caution because of the war expectations or tensions that we are seeing between India and Pakistan. Now let's discuss from the perspective of charts and open interest as to what it suggests for tomorrow's trade. So this is the Nifty daily chart. So today, as you could see, market opened on a positive note, but then was unable to stay put, and then we saw a good selling pressure that had come in, and it had closed towards the day's low. So as you can see the pattern, it indicates doji. So we also had previously the doji, but from there we had outperformance. Now at this level we might see underperformance coming in, and from tomorrow we might start sliding on downside. So we are still at the resistance levels, and this resistance level is surely going to have a major impact on uh, Nifty and then going forward for the subsequent week. So as today there was a news announcement that India's Prime Minister had already notified um, to all their ministries as well as to the army, stating that they have been given a free hand and then begin with whatever decisions that they want to go ahead and take to retaliate for the terrorism that Pakistan had uh, done on India. Now this would surely have impact on markets too. So markets would surely trade cautious tomorrow, and then if the escalations rise, then we might start seeing the sell-off coming in, because markets do not like uncertainty, and if this uncertainty continues and can lead to the higher escalations, then we might see a downfall coming in the markets too, because majority of the sectors will start underperforming, or there would be a down performance that would be seen except for defense sector. So given the kind of scenario that are being seen and the kind of news that is getting circulated, so this zone was a kind of high that had created today, and then that is the reason we had seen the sell-off that had come in. So from tomorrow, if the markets is trading below 24,200 odd levels, then we might see underperformance coming in the markets, and then gradually we will start the sell-off, and then we will see big candles coming in as the news on the India-Pakistan conflicts continue. So trade cautiously from here on, and keep the immediate shorts stop loss at 24,400 odd levels. If markets start trading above these levels, then we will not take decisively long positions, but it is okay to take the call sell at the higher levels, could be 25,000 or beyond 25,000 odd levels, so that if the market turns even positive for maybe a week's time, based on whatever the news outcomes that come in, still it may not decisively cross 25,000 odd levels in a week's span. So still we would be in profits because we are neither decisively long nor we are excessively short. So the good approach would be to take calls at the higher levels around 25,000, 25,200 and above, and then trade cautiously. If we see decisive movements coming in and there is a big candle that gets created, then gradually we can rotate the strikes and bring it towards 24,400 odd levels. Now let's see from the open interest perspective. So tomorrow is the weekly expiry for Nifty. In fact, today we see huge positions on the call side being built up. So there is a good writing that had happened. Roughly 60% of writing is seen at 24,400 odd levels. Then even at 24,500 odd levels, we had seen roughly around 40% of open interest positions that were built today. And at every strikes, if you see at the higher levels, we see good open interest positions that have been taken up. So what this suggests? It suggests that tomorrow Nifty might not trade positively, despite it can open at the place where it closed today, roughly around 24,300 odd levels, and then from there it might not sustain because there is already a selling pressure that we had seen, and it is expected to trade at the lower levels. So immediately 24,300 would act as a support because there is also roughly around 40 to 45% open interest on the put writing that had emerged. So this would act as the immediate support. If this support is taken down, then we might approach towards 200, 24,200 and 24,100 odd levels. So tomorrow's expiry again is going to be crucial for Nifty because this would put across the trend for the subsequent week. And since there are already a lot of talks on the war front that is going on, so we might start turning bearish at least for 1 to 2 weeks time until there is some decision that comes as an outcome because of this talks between India and Pakistan war. So later to that we can take positions, but as of now on the higher side it is difficult for Nifty to move. So on the lower side we have to remain cautious. Immediately once it closes before 24,000, below 24,000 odd levels, then we might see sliding that can happen extremely towards 23,500 as the initial support, and then towards 23,000 odd levels too. On the PCR front, overall it is trading at zero point 0.8, and at the money it is 0.64, which is not so bullish. So some caution has to be taken on Nifty for tomorrow's expiry. Moving on to Sensex. So Sensex again formed a doji kind of pattern which very clearly suggests that towards the resistance level we saw underperformance coming in, and this underperformance could continue tomorrow and slide down further. So we have to wait and see how the candles are getting formed. So if the candles are lower high and lower low, that suggests that we might expect to see the downfall coming in maybe a week's time. So already we had seen some underperformance today. So Sensex, despite opening on a positive note, it crossed roughly around 80,500 odd levels today, and then on the higher side we saw selling pressure coming in, and it closed just tad below previous day's close. So just 70 points it closed positive. So this from today suggests that there is some underperformance that would be seen on the Sensex, and then immediately once it starts trading below 80,000 levels, that would be the first approach for us to take short positions. So positions can majorly be taken on the calls at the higher strikes, roughly around 82,000, 81,500 and 81,000 odd levels. So immediately if we see there is some positive momentum coming in and Sensex is approaching towards 80,500, that would be the first level for us to close our positions for 81,000 odd levels for the upcoming week expiry. So as of now, it very evidently suggests that it is okay to take short positions at the higher levels, at the higher strikes, so that even though if market stays neutral or turns positive, it might not come towards 82,000 odd levels or cross beyond that. So this is the approach that we are going to follow for the coming week. Majorly the trend seems to be on a downward trajectory, but yes, we have to see whether that continues based on the news that is getting circulated, or it would altogether have a positive note. So let's see from the perspective of open interest. On open interest too, as you could see, we had Sensex expiry today, and 6th May's trades have already been taken. Um, and then as you could see, today being the first day of trading for 6th May expiry, we have already seen a huge built up in the call side. So this suggests that at least in the initial stage 80,500 remains crucial and a strong resistance for Sensex. So beyond that also we have good open interest positions being built at 81,000 odd levels and then subsequently at 82,000. So as we had discussed that these would be the levels for us to or the strikes for us to take short positions. We have already seen roughly around 50% of open interest positions already being taken at 81,000 and 82,000 strike, and even at the 80,500 strike we see quite positive trades on the call side. So this suggests that overall the markets or the call writers are expecting to put a lot of pressure, and Sensex might trade below 80,000 odd levels. So from tomorrow itself, if it starts trading below 80,000 odd levels, then that would act as a strong uh, uh, you know selling pressure for Sensex. And then since we do not have any good support coming in from the put writers until 79,000, so we might immediately slide towards 79,500 and then gradually we will approach towards 79,000 odd levels. So this would be a decisive zone. If Sensex falls below this zone, then we might see a sharp sell off coming in. So now let's talk from the perspective of PCR. Overall, it is one which is bullish to positive, and then PCR at the money is also 0.76, and majorly this is coming because of these open interest positions that have alone been taken today. So now let's talk from the perspective of Bank Nifty. So Bank Nifty from lot of days had been trading negative. there is some sell-off that we had seen at the higher levels, and today as well, Bank Nifty opened in fact positively, and was just tad towards the 56,000 odd levels, and then we saw sell-off coming in, and this sell-off continued, and it just barely closed above the sorry, it closed below the previous day's closing. So this suggests that again there would be a sell-off that would continue from here on. So as long as Bank Nifty trades below 55,200 odd levels, then it is a confirmation for us that we can start taking the short positions in the Bank Nifty, at least for a weeks to 2 weeks time zone. So as long as the news on war subsides, there is no point for us to go longs and take positions which are towards the positivity. So at all the higher levels, there is good scope for us to take short positions, be it at 56,000 levels, at 56,500 or 57,000 odd levels. So for at least a week or 2 weeks time, our expectation is that we on the downside would see some consolidation, and then if that breaks, maybe 54,500 odd level breaks, then we might see some sharp spikes coming in on the downside. So till this level, we have to remain cautious. Might be we might trade maybe in the tight range bound of 800 odd points, and once that gets broken out on the downside, then we will further see good pressure coming in, and then the sell off would continue for another maybe 1000 odd points until 53,000 odd levels for me, sorry, at least for a week's time, because Bank Nifty is trades on a monthly expiry basis, right? Yeah. So now let's look from the perspective of open interest. So open interest, we have had good positions that were built on the Bank Nifty at 55,500 odd levels, but there seems to be some positions that were written down. So as you could see, and even on the call side at 55,000 levels, some positions were written down. However, if you see, roughly around 10 to 20% of positions have got added at the higher levels of 56,000 and then 57,000. So these levels would be right for us to take short positions and hold it off for a week's time. So once the news surfaces out, if there is any positivity, we can maybe either cut down our positions or maybe take put positions at the very low levels, roughly around 52,000 or 51,000 odd levels. So may not be until unless there is a very big decision that is being taken and it is translating into a big escalation and war. Only then we might see a sharp downfall that is expected to come. Unless that happens, we might trade range bound or might see sharp fall down by 1,000 points in a day or two, and then there would be a slight recovery of 400 to 500 points. So this is how the market is expected to trade. So for the immediate support, we have at 55,000 levels, and then the next support is at 54,000 levels, and at every 500 points we see good support coming in on the Bank Nifty. So on PCR front it is zero point 0.9, and then at the money it is 0.96, which is overall positive. On the FINNIFTY, so we had been updating this in our channel as well as in our market vision videos on daily basis. There is some selling pressure that we had been seeing in FINNIFTY for a very long time. So if you could see from almost 5 trading sessions, it is not able to cross or move on the higher levels. So today, in fact, it showed some strength at the opening. However, that strength was immediately turned down, and there was a selling pressure that had come up at the higher levels of 26,400 plus. So Now we have closed at 26,200 odd levels. There had already been 200 points that got shaved off during the trading day. So this suggests that there is a negativity that has already built up. There was already a negativity on FINNIFTY, and today's closing very clearly shows that there is some negative trends that could be seen in FINNIFTY. So the immediate support that we have is at this level. So once 25,700 odd levels is broken down, then we might see some sharp sell off that is expected to come in, and this sell off might continue until this zone, 24,800 to 25,000 odd levels. So we have roughly a 1,000 point uh, you know movement that is expected. So initially, as we told, we might trade on a range bound scenario between 26,200 to 25,700 odd levels. So this 500 point we might trade. Once this gets broken down at 25,700 odd levels, then we might see sharp downfall coming in, and this might end up taking FINNIFTY down towards 25,000 odd levels too. So this was a previous resistance, now would act as a strong support. So let's see from the perspective of open interest. So on open interest, so today we had seen some built up that has already started, and then gradually at every higher level we see some open interest positions that are getting built. So here as well at 26,500 odd levels we have support. 400 we have again support as well as resistance. But since FINNIFTY is unable to cross on the higher end, the immediate support and a very strong support for us is 26,000. As we discussed yesterday as well, if this support gets taken down, then we are headed towards 25,500 straight, since we do not have any immediate resistance coming in. So as you could see here, we have seen a good sell-off that had come in, or unwinding of positions at 25,000 strike. So what this suggests, that this definitely says that in the coming days we might see some sharp sell-off that is expected to come in, though not a very decisive or strong open interest positions are getting built on the call side. However, there is some hint that we are getting based on these trades that somewhere that negativity is getting built up on FINNIFTY, and this would take FINNIFTY down towards 25,500 odd levels in the initial stage. Now let's talk from the perspective of PCR. So PCR overall it is 0.9, and PCR at the money is 1.13. So majorly this could be because of these trades that got taken slightly today on the call writing side. Now lastly we will talk from the perspective of FII and DII investments. So on the index futures, FIIs have been holding short positions to the tune of 18,000. On stock futures, they are again continuing to remain bullish by holding 17.29 lakh contracts. So they have been long on stock futures for a very long period of time now, and this gets continued. On the call options, they are short by 18,000 odd contracts, and on put options again they are short by 46,000 odd contracts. So net FIIs are holding positive positions on index options to the tune of 28,000 open interest contracts, which is not decisively bullish, but yes, this can definitely give some momentum for tomorrow's trade. On the proprietary traders, they are mildly bearish on index futures with 2.7 K contracts. On stock futures, they are long mildly with 2.89 lakh contracts. On call options, they are bullish with 51,000 odd contracts. And on put options, again they are bullish as they are holding the shorts on the puts. So to the tune of 45,000 odd contracts they are short. So overall net if you see, proprietary traders as well are positive on index options with almost 96,000 odd contracts. Now let's talk from the perspective of client. So client or retail trader is short on index futures by 23,000 contracts. On stock futures, they are continuing to be long with 16.39 lakh contracts. And on index options, they are net short by 78,640 contracts. So both FIIs as well as DIIs, or sorry, clients are long, and then proprietary traders are long, and then client is short by 78,000 contracts. So though overall the negativity is being seen on the charts on almost all the indices, so we might expect that the downtrend on the indices would continue for tomorrow. So overall on the cash position side, domestic institutional investors are long with 1,369 crores investments made alone today, as well as FIIs have also been taken investments to the tune of 2,386 crore in the cash market. So as we tell that if both FIIs as well as DIIs are continuing to remain positive, there is no point for us to be so much aggressive and take short positions. So as long as the charts do not turn around and the positions on both the FIIs and DIIs do not turn to negative, till then we can hold our long positions, or maybe be slightly bearish on the overall indices. So this suggests that we might trade in a range bound or consolidation scenario until something big news that comes in which might shake the markets. So till then, traders should stay nimble and wait for breakouts or breakdowns that are expected to be seen likely soon. So that's it on the FII and DII positions. So if you found this video useful, smash the like button and share your views in the comments. Tell us where do you think the Nifty is headed towards for the coming week. So until then, trade cautiously and see you tomorrow for tomorrow's trading session.